Hi, everyone. We're just going to give it a minute or two just to give people time to hop on, and then we will get started. I think we're probably good, hey? Well, we're going to kick it off. Oh, thanks, Dwight. Welcome to our webinar today. We're super excited to have Nauman Hafeez here with us from NetNow. We're excited to hear about the topic today as well, but I want to give a little bit of a bio in just a second. I do want to say a big thank you to the Sexton Group. They have become our education sponsor for the year, which means they're also the presenting sponsor for all of the webinars that we are able to bring to our membership, so we can provide information on what's new and make sure that we're keeping the industry up to date and advancing forward as much as possible. So thank you for that support. And obviously, thank you to all of you for joining us today. Like with every other webinar, we do record these. We do post them so that you have the ability to go back to watch the content. And then, of course, if you want to share with your teams, you're most welcome to do so. I think in this case, you might, if your finance folks are not on the line, it's probably something that you'll want to share with them as well. We want this webinar to be as interactive as possible today. So there is a chat function. Please use it. We are going to be monitoring it. Nauman is very open to answering questions throughout. So please be sure to engage as much as possible. And if there's a question you want to ask, I guarantee there's at least one other person who wants to ask that same question. Oh, someone needs to mute their mic. Okay, that's now happened. Okay, so I'm now going to introduce Nauman. Nauman is the CEO of NetNow, a fintech innovator transforming how distributors manage B2B trade credit. Nauman is dedicated to modernizing credit operations through digital transformation. His experience working with large financial institutions and their credit technology has helped him build a team of rockstars that are dedicated to modernizing the way distributors and wholesalers sell on credit. Welcome, Nauman, and it's your turn to take it away.
Thank you so much. I appreciate it. And thank you everyone for being here today. I know it's not easy to take time away. Some of you, especially in the finance teams, are probably dealing with year-end audits, even month-end now. So I really appreciate taking the time here. As Liz mentioned, I'm Nauman. I'm one of the founders and the CEO at NetNow. NetNow is a credit automation platform. We work with a lot of Supply Build Canada members around the accounts receivable automation and credit automation aspect. If you're a dealer, you're working with customers who don't want to pay you right away. They want to pay you in 30 days, 40 days, 50 days, if you're lucky. And you and your team will more than often have to kick off a credit application process. So you require information from them in order to make a credit decision on whether or not they're creditworthy to be given terms. And that process happens day in, day out. Your credit team and your AR team is responsible for that, along with a whole host of other things. We've been in this space for years now, both in Canada and in the US. And we've been supporting the credit teams when it comes to automating and digitizing this entire process so that they get more time to focus on the things that really are the most important for them, which of course relates to making sure the money comes in the door for your organization. And along the way, we were fortunate enough to have relationships with a lot of credit and accounts receivables leaders. We were able to set up surveys, set up interviews. We've spent the past 5 years developing a very detailed insights into the landscape of credit and accounts receivables. So basically everything your finance team needs to run its credit collections and cash application functions. And we wanted to package all of those insights into what you're going to see here today. So I'll kind of walk you through basically all of the different questions that we've asked credit controllers, CFOs, VPs of finance, and present that back today. And we want to make it as interactive as possible. So as you see these insights and these data points, Feel free to let us know if you agree, if you don't disagree, why or why not as well. As far as some of the data that you'll see here, it's kind of pieced together from over 1,000 in-depth conversations with credit professionals, along with a survey that we do with both, the National Association of Credit Management, the Credit Research Foundation, a few other organizations as well. And we tried to blend these responses so they're not just from a certain particular organization type or a particular credit level as well. So from a headcount standpoint, we've organized this across companies, or we've asked companies that are about 50 employees all the way up to tens of thousands of employees. We've also asked folks at different levels, so analysts, associates, credit managers, directors of finance, controllers, CFOs, so on. And that's kind of the data that you'll see here. Just upfront, some more insights and desk research, if you will. These are some of the key themes that will be recurring throughout the presentation. Overall, we've seen that accounts receivables and credit is under a bit of a pressure cooker. We've seen that 77% of businesses have experienced fraud or approved credit for untrustworthy buyers. And about 42 hours is spent right now on manual tasks just on processing credit applications. That does not include collecting payments. That does not include chasing after customers who haven't paid. That's just on credit. And so it's a lot of time that's being taken away from credit teams to focus on everything else. And that leads way into the key metric that we've seen: about 85% of credit managers are actively looking to adopt a digital credit risk solution. And before we go into this, for the folks that aren't in a credit and accounts receivable space, for the folks that are maybe thinking about the so what of this, right? Like, what does this mean for an organization? This is a new slide we just put in here. It's a very interesting piece of insight that was recently published by a very large publication that focuses on the business-to-business wholesale dealer distribution industry. What they noticed was that over the past few years, since basically 2020, when they investigated companies that leverage technology in functions like accounts receivables, credit, versus those that didn't, the laggards, they saw that those companies that do adopt technology typically trade at a 30 to 50% premium. So they looked at the enterprise value over the EBITDA, normalized it, and this is the graph that you're seeing here today. So that's kind of the so what of it, right? The information that you're going to be seeing here today, there is direct impact to your organization beyond just the credit and accounts receivables team. With that, I want to start by the insights on the first question that we asked folks, and I'd love to kind of maybe play this back to the folks on this webinar today. Is really just ask you, if you're in credit, finance, accounts receivables, what are you spending most of your time on today? Is it collections? Is it credit applications? Is it contract management? Is it customer relationship? Happy to give it maybe 15-20 seconds to see if we can get any nice responses, and then we can compare it with the insights that we saw. Got one for collections. Yep, getting a lot of collections. Yeah, and so just even in that last few seconds, I think by and large, representatively or directionally, collections was the most outsized time that credit teams were spending on. It's reaching out to customers who are past due or about to be due, making sure that payment information is correct. Once payment is collected, reconciling that. So that's about 74% of the time that respondents mentioned that they're focusing on. Another 19%, about closer to 20% really, was around credit applications and approvals. And what we saw was that credit teams that are spending too much time on credit applications and approvals are spending less time on accounts receivables and collections, ultimately impacting the day sales outstanding, the DSO metric. And so we asked them, okay, we know what you're spending time on today. What's your focus over the next couple of years? What is your priority over the next 1 to 2 years? And we got a very interesting set of responses. About 46% of respondents said that they were looking to implement new technologies to streamline credit and collections. And then another 24% said to hire top talent to support the credit and collections team. Around 12% said replacing ERP systems. So, for those folks who are going through an ERP system transformation, I sympathize. I know it's not easy, and it's usually it's pretty painful and long. So I hope, I hope he can get through that with something more modern. We asked this question about what was, I would say, now 18 months ago. And at that point, we saw 10% of folks saying they wanted to leverage artificial intelligence. We've asked this recently, and I'll show you this in a second. This number is skyrocketed. And so a lot more folks, obviously, as I'm sure a lot of folks here, you can't turn a corner nowadays without hearing AI in some shape or form. Yeah, and I mean, in general, we asked folks, what the key areas were beyond this. Some of the nuances that we saw was that 24% were focused on talent and hiring talent and retaining talent. What they saw as a key challenge was that, if they were to bring in somebody fresh out of university, someone in their 20s, and tell them that they have to do their entire job with paper and sometimes even faxes, that's not going to lead to getting top talent in the door. And so, this need for technology and this need for top talent, they kind of went hand in hand the deeper we dove into this. We also asked them, what are the key technology areas? You've just said, 46% just said that they want to implement technology, but what technology are you actually looking to get? We saw that nearly half, if not more than half of folks said, we want a way to collect payments digitally. We're tired of checks, and we want to make sure that, we have a streamlined way of getting payments in the door that's instant and that's automatically reconciled. A close second was digital credit applications. So similar to payments, we don't want to keep managing credit applications through paper and email and contacting a reference and contacting a bank and pulling a credit report. We want all of this done in one central digital system. And then about 40 or 39% said it was tools to help or technology to help with collections and automation. There's always more of a human touch when it comes to collection and accounts receivables in general. And so I think that's why the number was lower here. But overall, credit teams are looking for tools that are going to help them focus on digitization, automation, and ultimately reducing friction in this entire process. And then we said, okay, well, credit application is the second highest one. What part of the credit application and review process today do you hate, right? Do you like the least? Is it, requesting more information, the back and forth? Is it contacting trade references? Is it trying to pull a bank reference report, pull a credit report, getting signatures? And so again, I turn this back to the audience here. If you can, maybe, you're welcome to throw out all the things you don't like about this process. Yeah, we already got one for contacting trade references. References equals time. I hear you on that. Give it a few more seconds here. All right. Well, I'm happy to kind of just dive into the answers, and I think even with kind of the responses today, what we saw was the least favorite part was in fact collecting and requesting trade references. 43% of folks said that. 25% of folks said it was requesting updated information. Sorry, I lost the webinar page. There we go. And then another 23% said it was requesting bank references. And then honestly, 10% of folks just said it was all of it. It was that entire end-to-end process. They did not like all of it. Other things that we've heard recently was tax certification verification, especially if your customers are in the US. Validating tax certs can be quite painful. It was also the sales rep notification. So with credit, of course, there's a lot of back and forth that happens between the sales team and the credit team. Having a way to centralize that just saves a lot of time. And then, of course, documents not being signed. If there's anything else, I don't like to spend too much time on negativity, but anything else you don't like in that process, feel free to throw it in the chat. And so we asked those folks, all right, what is the biggest challenge, right? You've said that you want to adopt technology. You said we know what technology you want to adopt. We know why you want to adopt it because of all of the things you don't like about it. What's stopping you? And here, there was no real outlier. There's a lot of different answers, but they all kind of related back to these key themes. One was around getting internal buy-in. It was basically saying, like, I'm an AR or credit leader, I'm a finance leader, I understand the value of this product or this technology, but it's hard for me to convince this to our CFO or to our controller, to anybody who holds the budget, because the ROI isn't immediately clear. And so that's where we come in. We've built very comprehensive business cases for technologies, not just like ours, but others as well. We also saw a lot of folks saying there's too many disconnected vendors out there. I'm sure as you've seen in the last few years, there's a lot of like platforms out there selling a lot of different things. Figuring out which works for you has really, really been a key concern. And then cost is also a big one. It kind of ties back to the first element. A lot of folks were saying that things might be too expensive. The counter to that is, of course, it's hard to say whether or not something is expensive or affordable if you don't know what it'll do for you. And so it all ties back to that your return on investment thesis. And the last one is the lack of clarity. I mean, in the last 18 months, the whole landscape, everything now, especially from a technology standpoint, is AI. So how do you understand what tools are actually beneficial for you and what tools aren't? And that's where we come in. Again, we try to host sessions like this to try to showcase, at least within the accounts receivable side, what's out there and how do you use it. We also ask credit leaders around, if you were to pitch this to a CFO or CEO or controller, what were the key buckets that you would use to mention to them on the need to invest in technology? 50% of respondents, and these are usually credit managers, senior credit managers, and directors, said that it was to boost efficiency. 30% said it was reducing collections and credit risk, and 20% said that investing in technology would save costs over the long run. And then we also asked everybody, we understand the challenges and we understand now the need for technology, but what's driving that change? What have you seen in this space that you haven't seen before? And this was a very interesting answer. It's kind of a reflection of where we are as an economy in general across North America. 48% of respondents said that it's harder to collect. In the last few years, it has just gotten harder. And if it's harder to collect for me, it means I now have a increased strain in my cash flow, and I have increased risk exposure as well. And so that trickle effect across the supply chain keeps building and building and adding on. 39% of respondents said that they're seeing more fraud when it comes to payments, when it comes to applications. And obviously, like that number is probably going to rise with AI and just being able to create things out of on the fly. And then 32% of folks said it was harder to evaluate new customers. And then another 28% said it was they're seeing more bankruptcies and defaults. So they're seeing companies go under, come back up under a different name. There's inconsistent data. There's limited credit history. There's industry instability. All of these things are kind of consequences of where we've been over the last few years, right? Global pandemic, rising inflation, all that has had several downstream impacts to small, medium, and even mid-market companies. And then with that, we wanted to talk a little bit more about the future, right? We talked a little bit more about in the next couple of years, but right now it's kind of hard. And we only added these additional questions in recently. It's because everybody was asking about this to us, and we wanted to present this data back, right? How are the credit and accounts receivables and finance teams using AI? Before we even jump into that, I think the first question is today, how many folks are actually using AI? And so if I could throw this back to the audience, if you can say within 10, 15 seconds, if you're using AI and what you're using it for, and we can compare that with the answers that we've got. So we got a few folks saying not yet, a few yeses, which is good. If I had asked this question 18 months ago, I think categorically it would either be crickets or a flat no. And we're seeing more and more folks, actually saying they are using it. And I think by and large, this is the breakdown of the responses. We asked this question I would say 6 months ago now, and I would say even that's outdated. So at that point, about 37% of folks said that they were exploring AI tools, and another 24% said that they were actively using or piloting AI tools. And this could be as simple as Copilot or Gemini or ChatGPT or one of those tools out there. But nearly 60% were interested and investing in this space. And another 40% said that they were exploring, but not yet implementing, or just totally skeptical and not interested. This number, I feel like, is going to shrink, and I think this number is going to grow quite a bit. So we're going to do the same question in about 6 more months. What we've seen as far as kind of, the obvious question becomes, well, what are you using AI for? And we limited this to just the accounts receivables and finance space. And so we asked them, where do you see the most potential for AI? About the key answers, or the major responses were, detecting fraud patterns or red flags. So having AI tools being able to detect patterns or flags amongst our customers who are applying for credit, amongst customers who are trying to pay us. Another key metric or key area for AI is having AI tools help with credit risk monitoring, with the likelihood of default, automating credit application review processes, and helping prioritize collections outreach. Having AI tools that can understand, oh, Susie pays on the second Tuesday of every month. I'll make sure that we reach out to her a week before that, just to make sure things are all on track, and don't reach out to her multiple times because we know that's her payment behavior. These are some of the different areas. I mean, obviously, other folks said generating insights for credit decisions as well, automating some credit decisions. And then we also asked the counter to that is, okay, you for those who didn't want to use AI, what are the biggest concerns that you have for it? And in this space of credit, accounts receivables, finance, collections, the biggest one was this lack of subjective information or the human touch. I always say accounts receivables and credit, it's a balance of art and science, right? There's a human element to it. There's understanding your customer, and just having a tool that overwrites that and bases everything off of objective information can sometimes not be the best outcome, even though it sounds good on paper. The next thing that we saw was inaccurate or biased recommendation. So it's, AI hallucinates. If anybody's used ChatGPT, when it's right, it feels confident. When it's wrong, it feels just as confident. And that's not great, especially when you're making a decision for an organization. Things are getting better. There's more safeguards in place. There's better prompts to make sure that your answers are well contained. But that is still a key risk that we came across. And obviously, the other big one is regulatory or compliance risk. How do I make sure that any AI tool that we use, they follow our data governance, they follow our privacy policies? And so we did launch an AI framework for organizations. It's on our website. You can download it. It provides you the key things you should be looking at anytime you investigate or look into a tool that leverages AI. And with that, we also want to talk about sales and credit briefly. So just quickly, this is much more geared towards the credit application process, but what we've seen is that communication between sales and credit usually breaks down at this element. When there's a credit application or credit account, obviously sales wants to close that account as soon as possible, and credit needs to evaluate that account. And just any miscommunication typically leads to poor customer experience, missing data, longer time frame for approval, ultimately potentially a lost deal, or just as bad, a deal that was never supposed to have gone through, which leads to bad debt and sometimes write-offs as well. And technology here just helps streamline the entire process. So this was taken from folks who had adopted technology in this space. What they saw when they adopted technology that helps marry the credit process along with the sales process, 81% of folks said that they were able to see streamlined communications. 88% folks said that their customers actually had a better experience because everything was done digitally. And then 76% of folks said that they were able to provide more data-driven analysis. And so it's hard to say why an account was rejected if you can't show the data. But if everybody knows internally why an account was denied for credit or why an account was put on COD or payment in advance, it just makes that it makes it easier for the sales reps to manage the relationship alongside with the credit team as well. And then lastly, we talked about this concept of fraud. So especially when it comes to payments and credit applications. So the next few slides will be more geared on the credit application side of fraud. But maybe before even I get into that, has anybody experienced fraud specifically in the credit and AR department? And what kind of fraud are you seeing? You're welcome to also say no fraud. We got one no fraud. That's great. I can show you kind of what our response rates look like. So this was done through a lot more folks. I would say in the 5,000 responses we got for this, and nearly half of the organizations reported fraud either frequently, so only about 11%, which was weekly or monthly. Yeah, fraud has been to bank account information for EFTs. That's the most common one. When somebody calls and says, "Hey, my bank account's changed," we hear that all the time. And then about 35% said that they're reporting this occasionally. So what we saw was that fraud usually happens for customers or businesses where the goods are easily sellable in a secondary market, and they're also easy to transfer. So if you're selling like a lot of, pallet of lumber or plywood or something like that, it's going to be harder for a fraudster to pick up that and actually go and do something nefarious with it. It has happened, but I would say not as frequently. However, you might still get more and more fraudulent credit applications. This is one that we've seen come across. So this is a customer of ours. Before they were a customer of ours, they got this credit app. And unfortunately, the criminals or the fraudsters made away with about $48,000 worth of product. And so I wanted to show you what a fraudulent credit app could look like. At first glance, Bechtel Global Corporation, very massive organization. The federal tax ID number looks correct. Curious if anybody has any thoughts on what looks off. It's like one of those pictures, right? What's wrong with this picture? Do you see anything that doesn't look correct about this credit application? Bank name spelled incorrectly. Yeah, yeah. Billing and shipping, exactly. So you'll see like it's Bechtel Corporation, but they applied with like an email that says account payable at Bechtel, and they threw a G in there for some reason, .com. Now, to somebody, this might just be the domain for Bechtel, but this is actually a fake website domain that's meant to replicate this real company. And this is a company that says that they were started in 1898, but the accounts payable person just happens to have the same name as the person who owns the organization, or whose name is on the organization. And that person's email is also account payable and purchase. And then even with the trade references that they provided, those references look like really big names. Yeah, exactly. The trade reference email seems sketchy. You've got Dean Foods, Acom Global, Emerson Electric. These are pretty well-known brands. However, when you look at the emails associated with them, they're totally off. And so, if somebody's processing a lot of applications, this can slip through the cracks, right? Sometimes it's easy to find as this. Sometimes it's one little thing that's in here that'll trip you up, or that will actually indicate that it's fraud. And we put this through our system, and our system is able to detect a lot of this. So we'll showcase the website trust score. We put that same application through our system. It said that was not a trustworthy website. Our system also looked at the domain and said this does not exist. It's not a real website. We looked at the age of the domain, and turns out Bechtel G was created 10 months ago, which is kind of weird for a company that was started in apparently 1898. And then the legitimacy of that domain was incorrect. So there is a real company, Bechtel Global Corporation, and that's their email. That's their website. This is not the legitimate website for that company. So our system was able to detect all of that, along with the EIN and phone number as well. And so if fraud has been a concern, tools like ours exist beyond just like the credit application process. And we asked folks around how, if they were dealing with fraud, how they managed it over the last 12 months. And so 51% of folks said that they've done something about it. 36% said, we just improved this through internal process. The easiest way is we'll make sure our sales rep actually goes and does an on-site visit of that company just to make sure they are who they say they are. That can solve a lot of problems. But obviously it involves more work and more back and forth. About 16% said they implemented technology, so either ours or something else out there. And then the remainder either are not prioritizing it or are exploring options right now. And with that, I wanted to kind of just move over to a Q&A section, and also just thank everyone for their time, and reiterate who NetNow is. We're a credit automation platform. We've worked with hundreds of thousands of businesses across the US and Canada to help digitize and automate the credit application process. So that includes setting you up with a digital credit application form, helping you prevent fraud, automating the trade and bank references that a lot of folks said they didn't like, giving your sales reps insights into accounts that are processing for credit, helping you with annual reviews and ongoing monitoring as well. And of course, like we have AI woven in across each element of this. We focus a lot in the lumber sector. Obviously, being partners of Supply Build Canada, a lot of our customers are from Supply Build Canada as well, or are SPC members. Just a quick case study of a customer. This is more in the U.S. Big Creek Lumber, a very large lumber supplier out in California. They were going through a pretty tough time when it comes to credit and accounts receivables. They were having lengthy credit customer onboarding processes. They were facing some pretty serious compliance risk. And so just having the security that our system offers through data encryption was a huge plus. They were getting hit with fraud, and they were spending a lot of time on manual outreach. So a lot of this calling banks, calling trade references, trying to pull a credit report. They implemented NetNow, and these are some of the things that they had said. Their biggest benefit was really around getting those ongoing monitoring alerts and fraud verification. The implementation process was about 2 weeks for them, so they were able to get up and running very quickly, and they had a return on investment. So they had come up with a thesis for return on investment. It was a year, so the system would pay for itself in a year. They were able to pay for that within 6 months. And their key reasons, when we asked them, like, what would you say to somebody who's looking into this? The key reason for recommending anybody to NetNow is really maintaining compliance, reducing time, tracking accounts, and streamlining the entire credit application process. They also said that one benefit that they didn't realize was how it helps their sales team follow up on potential customer leads. So if you give a customer a credit application today, kind of forget about it. With our system, they can send automatic reminders and make sure that customer actually ends up applying and becomes a customer of your organization. I'll pause here to see if there's any questions, if there's anything you wanted to go over, not just about our system, but about the data that I presented, about what your thoughts are, any questions that you have about the landscape of technology as it pertains to AR, credit, and finance.
I'm curious to know how many of the credit applications, like what percentage of credit applications members are getting are actually fraudulent? Like, is this is it as high as 50%? Is it 25%? You might have showed this and I don't remember, but I am curious to know how many of these come in.
Yeah, so it really depends on the industry. We have customers, I would say, on average, it's about between 5 and 10% a month. And that's fine, but if you're doing a lot of credit applications, if out of 10%, even one gets through, that's a $50,000 to $100,000 hit, depending on how much credit you've offered them.
Like, I was just looking at that application that you showed us, and if someone's having an off day, they've got lots going on, some of those details could easily be missed. So I think having that alert system in the background is really cool. What's the accuracy on the alert in terms of capturing when there's an alert for fraud? Like, what would you say the accuracy is on the AI piece there?
Yeah, right now, we have not had a single reported case of fraud come through our system. So our system learns, it gets better, it understands how fraudsters are applying. And so far, knock wood, there has not been a single one that has come through.
That's awesome.
Yeah.
Does anyone else have any questions? Are any of the retailers on the line right now using this right now? Because you had talked about manufacturing and wholesale, but I'm also curious to know what retailers might be using it.
I'm not sure. If anybody is a customer or using a similar system, please feel free to let us know.
Yeah. Okay, no questions? No answers? Oh, not that I know of. Okay. Thanks, Robbie.
Awesome. Well, if there's anything you need from us, please let me know. The best way to contact me is you can go to our website, netnow.io, or you can email us at the emails provided below, Nauman@NetNow or Eli@NetNow. Happy to speak with you. Also happy to connect you with other SBC members who are using our platform if you wanted to touch base and see how they're liking it.
Thank you. Before we let Newman go, is there any other questions before we tie this off? I want to make sure we leave some time for that if there's any curiosity.
Will this webinar be sent to us via email? A
Sure
recorded
will.
version? Thank you. Really appreciate it.
You're welcome. Okay, seeing nothing else coming through, I hope you had a chance to take a snapshot of Eli's and Newman's contact info. If you missed it, we are happy to create that connection for you so that you can have a conversation with them and how you can apply this technology to your business. Thank you so much for joining us today. And Crystal did ask about the webinar. We will be sharing this with you so you can share this with your teams as well. And we encourage you to reach out to the NetNow team to see how they can better support your business. Our next webinar is coming up very soon. I don't have the date off my head. I started announcing it, but if you go to our website, we have all of the links available for you to register, and we have been sending updates through our e-news as well. So thank you so much for joining us, and we look forward to seeing you on the next one. Have a great day.
Thank you.
Thank you, Newman.
No worries. Thank you.